Now, to round out the year, in the month of December, it wasn't too great for Sydney and Melbourne, both of those markets essentially sitting flat, just down by 0.1%. However, the four markets that had the strongest 2025 continued to perform extremely well in December, with Brisbane up 1.6% in December, Perth and Adelaide up 1.9%, and then Darwin up 1.7% as well. With Hobart just at 0.9% and Canberra at 0.3%, it was a pretty decent month, all things considered, because generally December is a really slow month in Australian property. But obviously these four markets continue to perform really, really well. Now, if we jump into the annual capital growth rates across the board, gives a bit of a snapshot for the year from December 24 to December 2025. Basically, every single property market in Australia increased in value. Now, obviously some winners there and some other markets that didn't perform as well. Now, Darwin was Australia's top performing capital city throughout the year in 2025, increasing by 18.9% over the year, closely followed by Perth at 15.9% and Brisbane at 14.5%. So these three capital cities had an awesome year. Adelaide did really well at 8.9%. We got Hobart up by 6.8%, so had a really strong year there. Sydney 5.9%, Melbourne 4.8%, and Canberra 4.9. So across the capitals looked really, really good in 2025.
So for example, Brisbane isn't just a city that did an average of 14.5%. In fact, according to CoreLogic and some of our favourite analysts around the country, over 25 suburbs in Brisbane did more than 20% growth last year, including many of the suburbs that we're buying for our clients. So remembering that within averages, there's all sorts of different numbers there, but some markets in Australia cranked a lot higher than what we're seeing over the last year.
Now, as we look back to what vacancy rates were doing in the month of December, still really low across the board. Outside of Melbourne being at 2%, every other capital city in Australia is recording a vacancy rate below 1.5% right now, with Hobart the lowest at 0.4%, followed by Perth at 0.7%, Adelaide at 0.8%, Brisbane and Darwin at 1%, Canberra at 1.5%, and Sydney at 1.4%. These are chronically low levels for vacancy rates.
And when we look at auction clearance rates for the month of December, I actually had to modify this data slightly because it was just looking so horrible in that last week leading up to Christmas, as you guys can imagine. You'd have to be crazy to list your house or to try and sell it the week leading into Christmas in Australia. But the weeks before that were obviously super low across the entire country, without huge amounts of auction numbers or people selling their properties at auction in December. We generally see the same thing in January, and then as we continue to transact throughout this year, between February and November is when we should see those numbers going back to their normal levels. Now, when we look at consumer confidence in the month of December, it was actually down quite significantly from the month of November, which according to Trading Economics, the number dropped to about 94.5%, which is actually significantly low. And we felt that in our business as we were out there in the market, just the way that people and Australians were feeling about property, feeling about investing in December sort of dropped a little bit.
And one of the things that could help that is unemployment rates remaining at 4.3% in November, according to the ABS, which is really good to see those numbers track sideways. As we look into lending rates, at the moment, we're seeing some pretty crazy numbers. 59% of properties being purchased or loans being written are for owner occupiers, with 41% going to investors. Now, since recording these monthly market updates, 41% is basically the highest number that we have seen and significantly higher than this time 12 months ago. So lots of investors getting out there at the moment. And as we take a really quick look at the interest rates, it's really positive to see a bit of a decline over the last month. The average variable mortgage interest rate was 5.85%. The average fixed mortgage rate was 5.4% according to Mozo. So it's really nice to see. That seems far more in alignment with the types of rates that I've got at the moment and a lot of our clients have got at the moment, compared to previous months where we did see that up around the 6%.
Now, when we look at the total number of listings across the country, which is really a supply and demand indicator, which is important for us to measure each month, these are down by about 5.4%, which is what we're noticing as buyers agents in the market out there. There is smaller numbers of listings with more and more demand in the key suburbs around the country, which is creating pressure on pricing. And that's why we're seeing the likes of Brisbane, Perth, Adelaide, parts of Melbourne and Darwin going ballistic as we speak. Now, when we look at the number of distressed listings across the country, they are down significantly year on year, which has probably been positively or partly attributed to the fact that interest rates have come down and stabilized, and employment options as well as incomes in many, many households have gone up over the course of 2025. Now, in terms of this month's gold nugget for January 2026, some really, really positive news coming out regardless of where you look for Australian property. So according to SQM, Domain, realestate.com and CoreLogic, all of these different analysts are expecting every single capital city in Australia to increase in value over the coming year, which is extremely positive for both you guys and us as investors.
It's actually music to my ears, and I'm really excited about 2026 because for the first time in 5 years, I'm finally pre-approved and ready to purchase my 5th investment property. This time within my self-managed super fund based on the advice that I'd received from my accountants, my financial advisors. So with about a $700,000 to $750,000 budget, I'm going to get down into Victoria and try and find the best property as soon as possible.
Now, the other positive news for 2026 is for us as a business. As you guys all know extremely well by now, Simon and I over the last 10 years have bought over $700 million worth of investment property for ourselves and our clients. But for the first time in our business's history, we'll now be buying in Victoria, New South Wales and Queensland. But on top of those incredible metro markets, we can also help you buy the best and the largest major regional markets in each of those states as well. So if you, like myself and Simon, are looking to buy an investment property in 2026 somewhere on the east coast of Australia, then we would love to offer you a one-on-one strategy session. All you have to do is jump over to www.pumpedonproperty.com, click that free strategy session button, and we can talk about exactly where you are right now, where you'd like to be longer term, and we can sit down and help you review the positives and the negatives of the different markets around Australia. And then you can take that information with a grain of salt and go and absolutely smash it on your own, or potentially become one of the extremely small number of clients that we take on each week. But either way, we truly wish you the best for 2026. We're super excited about it. We're both back in the market personally again, and we're excited to bring the stories and our own investments to you over the course of this year as we pick them up.